Hi, I'm Dennis Hudson at orangequant.com, and today is a 10-minute video that you will be glad you watched. This is about how to trade less than 10 hours a week. That includes your research. All you have to do is the things I'm going to point out to you, and you'll be glad you stuck around for this video. 10 minutes and we're done. We're going to run right through it, okay? Stay with me. Alright, the question is, how do you do this to trade only 2 hours per day or less? What I'm doing is kind of averaging this across. You'll see what I'm talking about in a minute. What you'll be trading is only the inflection, and if you look at our recent videos for any period of time, you see we get about an 87% success rate in calling inflections, and I'm going to show you how to do that. Quick review, this is what an inflection looks like. The one on the left you would be shorting up at the top of that yellow candle up there, and the one on the right you'd go long at that yellow candle on the right hand side there. But why this? Why trade inflections? That's because inflections are kind of like algae in the ocean. I mean, it's the most populous item in financial markets is inflections. So you just scoop them up and you grow into a great big whale out there in the sea of finance. Take a look at this. This is Bank of America going back 6 months. So the left hand side is 6 months ago roughly. Those green dots are inflections, and just check it out how many there are. More inflections, more inflections, more inflections. Across 128 trading days, 51 inflections. If you had, let us say, 100 shares of Bank of America, let's say you started out around $15, and you just kept trading, and you hit each and every inflection right, that would be and the average height of an inflection, where you just get in on the day of the inflection, and you exit the next day. You don't take out a long run and try and swing for the fences like this inflection to that one where I just drew a yellow line. You just going from one day to the next at $100 per trade. That's 100 shares, a $1 gain. At the end of 6 months you would have $5,100 profit on top of your initial $1,500. That's pretty good. Now here's what your work week would look like instead of you slaving away 10 and 12 hours a day with the markets. On Saturdays, let's say you'd put in 2 hours of research to do only 5 stocks with the methods I'm going to show you. And then when you're trading during the week, you'd go in at the open and stick around for about 30 minutes, and you'd come in about an hour before the close. So that's 9.5 hours total per week. Incidentally, the reason you can get away with this is because very few trading days, the candles for those days, very, very few of them have long stems or wicks, upper, lower shadows. So you don't even worry about that kind of stuff, okay? So you're able to come in at the open, like I say, and then just before the close. Now here's one method. This is the H205 indicator that we developed for you. And this you can run in a spreadsheet, or if your broker allows custom indicators, you can load the code into your broker's custom indicator box, and you can actually use it for day trading that way. Alright, once you have the H205 plot, and this looks like it might be, you know, similar to MACD or RSI, don't try this kind of game with those indicators. There's a mathematical reason why H205 works and they don't. Back here you see the 2 yellow dots. That's where I drew the trend line. That's the only references for the trend line, and extended it out to the right, that lower trend line. 2 dots up above, that's the only references for that, extended it to the right. Where they intersect, that marked an inflection right up here where I'm circling it, okay? So, and you'll notice if you look at this, if you just go through, you can come up with multiple inflections out here in the future. In other words, the past, when we made this forecast, it was this last dot right here, okay? That last dot was the past. The future is forward. This inflection was called 9 days in advance. And you can do the same thing with intraday charts, 5-minute, hourly, whatever you want to do. In fact, you look back at the videos, you'll see I did one that was intraday that was bang, bang, bang. Now here's one of the other methods out of FLIR 2 ebook. This is from an article that I wrote for Futures Magazine, Spotting Momentum Swings in Advance, November 9 edition. This is a very prestigious magazine. You want to look up that article. Very quickly, we have 2 reference points here, these pink squares down here, and I drew a trend line like that extending out. This bright red line is the last of the reference points for the upper trend line that you can see there, and anything to the right of that is out in the future. Okay, and the way I did this, I measured from the top of the candle at A to the bottom of the candle at B, and I had a certain length. I fitted that length right in here where you see this put in right here where I circled it, and that is an inflection. And then I did from the top of A to the bottom of C, and I stuck that in further out, which was over here to the right, and you can see where I just circled that. It's also an inflection. Some inflections are bigger than others, of course. Now there are a couple other methods in the FLIR 2 ebook for finding inflections, but I won't detail them. I want to backtrack here to that Bank of America chart I showed you earlier with all those inflections. Notice that if you were to trade here just for that $1 gain there, that you'd be able to do it from one candle to the next, just a pair of candles there. But let's spin this a bit. Suppose instead of just starting with that $1,500 we talked about, suppose you kept compounding it and trading your bank over and over again. So here's what you get by compounding it. $27,630, give or take a few pennies, across 51 trades. Just 51 trades in 6 months. But of course that assumes you got it right each and every time and you found each and every one of those inflections. So, would you settle for, let us say, about a third of that in 6 months based on an initial $1,500 investment? Let's say you only get like $10,000 you walk away with. I think everybody would be happy with that. And that's based on a 1.06 factor, in other words, a 6% gain per trade. You can do this, believe it. And it's all there for you in the FLIR 2 ebook. Here we have your trend line, which is a type of FLIR 1. And then you have H205 that you can use. There's something else called tau and iota values, which are just a couple of constants, a couple of numbers that you multiply times the number of candles that you're looking at between inflections. That's even easier, but it's a little less accurate. It's plus or minus 1 day or 1 period. You can do this. And then there's another tool, synthetic trend lines. You want to know about that too. All of it in the FLIR 2 ebook at orangequant.com. And the price is now $29.95. As soon as I finish this video, I'm going to go in and modify it from the $18.95 on up to the $29.95. Are you glad you watched this video? You will be. I'm Dennis Hudson at orangequant.com. Thanks for stopping by. Go back and look at the success rate. Check it out. 85, 87%. This is powerful stuff, folks. Don't miss this.